Hello everybody, this is Mike from Your Car Dealer Bond. Again, just wanted to share some more insights. I know we've had some videos, one where we talked about garage keepers coverage, one where we're talking about truth in lending coverage. Um, we've started to kind of get into these. I think I did one on uninsured motorist coverage. I'm going to keep on going down the list to make sure that you guys, in one way, shape, or form, have your arms wrapped real tight around the kind of coverages that you're going to need to properly protect your dealership to the extent you want to. So in this one, we're talking more about your dealer's physical damage, your open lot. They're going to call it a lot of different things. Dealer's open lot, they're going to call it dealer's physical damage. They'll call it your lot coverage. This is vehicles that are in your inventory. You own them. The business owns them. You've bought them, took them in on trade-in, whatever have you. But there's a set of coverages that you're going to need to properly insure certain elements of that exposure. So you take in, let's say that you pick up a vehicle from auction. And I know the auctions aren't full blown open just yet, but let's say that you pick up an auction. I'm doing this in the middle of May 2019 or to 2020, so you guys can understand what we're going through as of middle of May, June 2020 in California in particular. Dealer's physical damage. These are vehicles that you took in on a trade-in. Let's say you picked it up in an auction. You paid $7,000 for it. You paid $7,000 for it. Now your intention's to sell it for $8,500. Let's assume $9,000, whatever. You're only paying though $7,000. You might pay another $500 in reconditioning. Might pay another $1,000 in reconditioning. Right? Those are the only amounts of money that you have that's your only exposure to that vehicle. Yes, you lost an economic potential of making a profit, but you're not out that money. Insurance is only to make you whole again. It's only to get you back to zero, right? A claim is there's a hole in your backyard now. Insurance is trying to fill up the hole. It's not trying to get you to anywhere above where that level ground is. So you buy it for $7,000, you recondition it, right? Leave expected profit out of this thing. You gotta rinse your filthy mind of the idea that you're gonna insure that. You're not. And no matter what, you could say, well, I'm just gonna insure $10,000, and then if I have anything under $10,000, they're gonna pay me $10,000, right? They're gonna look and say, okay, let's have a look. Let's get a look-see here. Let's see your auction receipts. Let's see your wholesale documentation where you pick this thing up, and let me see what it looks like on paper of how much you're actually out on this vehicle. Oh, you've got some reconditioning. Pony up those receipts. Let's have a look. And then at that point, they're going to tell you, okay, you have a deductible, either $500 or $1,000. Okay, then they pick up and pay the rest. So imagining that let's just say there was a let's just say that there was a $7,000 claim. You paid $7,000 for this car. Okay, you put $1,000 into reconditioning it. You turn around and it gets stolen. Okay, perfectly legitimate claim. And now you're putting in and you're looking for an $8,000 payout. There's a $1,000 deductible, so you're gonna pay the first $1,000, and then they turn around and cut you a check for $7,000 to get you somewhat whole again, minus your little skin in the game. So that's the way that works. And there are severe penalties. I frequently hear this. Well, I'll just tell them that I have, instead of $100,000 worth of cars, I'll make sure any one vehicle is insured up to $10,000, and then on the rest of this, I'll just tell them that instead of $100,000, because what's the chance everybody's going to come in and steal the car at the same day, or there's going to be a hailstorm in California that's going to ruin my lot, or everything get vandalized that's on the lot, right? they're thinking, well, I just get a $50,000 limit for the whole lot, and then 10,000 max per vehicle. The max per vehicle will cover me, no problem. I only buy $7,000-8,000 cars. I only put $1,000 reconditioning into them. That covers me, right? Well, if they come time of claim, first thing they're going to ask you for is, let's see your inventory sheet. What's in your inventory? How much do you actually have of inventory? That's the big question right now. Take the snapshot right here, right now. How much do you have in your inventory? Oh, you have $100,000. It's interesting because on this policy it says that you have $50,000 worth of coverage for your whole lot, and it sounds like you gypped the insurance company out of 50% of the premium you would have been paying. So they're gonna pony you out of 50% of that claim. So your $8,000 claim before your deductible gets reduced down to $4,000. That's your claim. Now that $8,000 car, you bought it for $7,000, you're in it for another $1,000. Total in, all in, $8,000. Before they even touch the deductible, they take out that 50%. They say, you screwed us out of 50% of the premium, we're going to screw you out of 50% of your coverage. Done. Now pay your $1,000 deductible. Your claim is $3,000 out the door. That's what you're looking at. So you don't play these games of it's not in your best interest. It's not because I don't see it from your perspective. Of course I do. It's not in your best interest. You're paying pennies on the dollar if you actually insure it right, because it's only a couple $100 more for that matter. It's going to cost you several thousand in the end if you're not going to sleep right at night anyway. What are you buying insurance for if you're not going to actually protect yourself properly? So, well, I'll self-insure the rest of this. Okay, just as long as you understand what you're doing, self-insure away. It's a risk that some dealers take, and over the course of 5-6 years, they might do fine on it. Eventually, they might make enough money to say, let me get this right. Most times that doesn't happen. Most times they just continue like that in perpetuity, and then eventually it bites them. And their hope is that they've taken enough out of the system and cheated the system well enough to have paid for that claim. But all said and done, by all means, don't cheat the system on this. The system has seen this once or twice before, let's just say. And these insurance companies, they know what to do. They know how to protect themselves in these scenarios. You're not going to pull the wool over their eyes on this little trick that everybody knows for the last 30 years. It's probably not going to happen. So trust me, get the numbers right. And as you fluctuate, I understand you don't want to be making changes on your insurance policy every week or every month even. But imagining that one day down the line, you start to see an increase, and before you had 100,000, now all of a sudden things are banging. Things are banging, baby, and you now need to increase that to 125 or 130. Make the change in your insurance policy. It's going to be a very small bill to you to have to pay, versus later on down the line, thinking that money should be there come claim time, and really they're taking only and putting half of that back into your pocket. It's not the way to go. Make sure that these limits are right. Make sure that you're completely transparent about this, and hopefully you got a good insurance agent that's actually asking you the right questions, trying to kind of drag some of this detail out of you. But at this point, you're probably more educated than 50% of the dealers or of the insurance agents that sell used car dealer insurance, just by understanding some of these coverages, truth in lending, uninsured motorist, how your liability works, what triggers there are there. I'll do one of these on where the triggers are that actually exclude coverages. That's probably an interesting one for you guys too, is to understand when are they not going to pay, right? What scenarios are they not going to pick up? Where am I limited in this thing? Where am I self-retaining this risk? Right, so we'll talk about those things, but little by little, I want to continue to put out this good content so that used car dealers in particular can really understand what they're buying when they have an insurance contract, also known as an insurance policy. But what are you buying when you buy that contract? What is it that the insurance company has to do for you, and what is it that they're going to turn around, wash their hands of you, and walk in the other direction because they feel like you stiffed them? Again, this is Mike from Your Car Dealer Bond. Wishing you guys all the best out there. If you guys have questions on stuff, by all means, give me a shout. You can reach us anytime. I get these calls in the middle of the night sometimes. 866-357-4405. 866-357-4405. or you can hit my website. Probably the easiest way to get there is cal-surety, surety, cal-surety.com. Tons of content specifically for used car dealers there. If you guys need anything, if we can help in any way, the name of the business is Your Car Dealer Bond. Literally, that's the name of my business. So um, at the time where you need a surety bond, we can certainly help you with that. That's the easy stuff. Your insurance contract's a lot more complex, but we can help you there too. Reach out to me. Be happy to help in any way that we can. By all means, you guys take care out there and keep slanging them cars.